Hello everyone and welcome back to my channel. I hope all of you are keeping safe. So today my topic of discussion is Economic Substance Regulation or ESR. I'm sure most of you are already aware that UAE has introduced a new regulation on 30th April 2019 and this is called Economic Substance Regulation. This is applicable to certain categories of business that are based in the UAE. So let's go through it in detail. So today I'll be discussing about the background, the objective, the scope of ESR, relevant activities of ESR, contents of ESR notification, regulatory authority, reporting period, deadline, penalties, and glossary of terms. So before getting into what is ESR, we need to first understand why UAE has introduced ESR. So in order to understand why UAE has introduced Economic Substance Regulation, we need to understand certain terminologies like OECD, BEPS, EU, etc. So OECD is the Organization for Economic Cooperation and Development. It is an international organization that works to build better policies for better lives. BEPS, BEPS. BEPS stands for Base Erosion and Profit Shifting. This refers to a tax planning strategy that exploits gaps and mismatches in tax rules and thereby shifting profits to a low or no tax location where there is a little or no economic activity. EU stands for European Union. It is a group of 28 countries that operates as a cohesive economic and political bloc. So I'll be explaining more about OECD and BEPS towards the end of this video. So if you are interested, you may please listen to that as well. So now let's see why UAE has introduced Economic Substance Regulation. The UAE has introduced Economic Substance Regulation to honor the UAE's commitment as a member of OECD Inclusive Framework on BEPS and also in response to a review of the UAE tax framework by the European Union, which resulted in the UAE being included on the EU Blacklist. So the issuance of the Economic Substance Regulation on 30th April 2019 and the subsequent release of the guidance on the application of the regulation on 11th September 2019 has ensured that the UAE has been removed from EU Blacklist. So now let's see the objective of ESR. The objective is to determine the requirements and to set out criteria that confirms that the licensee means the company, is carrying out an activity in the state. The state is UAE. Activity means relevant activities as per the regulation that achieves economic substance interest. So basically the objective is to determine the requirements and set out the criteria that confirms that the company is carrying out relevant activities in UAE that achieves economic substance interest. So now let's see the scope. It applies to a licensee that carries out any relevant activity. Licensee means the company which is established in UAE, and relevant activity. There are 9 relevant activities as per the regulations and I'll be explaining it in this video. And if a company is directly or indirectly owned 51% or more by the UAE government is considered as exempt for the purpose of ESR. Now let's see the economic substance requirements. First one is the company should conduct the relevant core income generating activities in the UAE. Second one is the company should be directed and managed in the UAE. And the third one is with reference to the level of activities performed in the UAE. It is of three categories, like the company should have adequate number of qualified full-time employees in the UAE, and the company should incur an adequate amount of operating expenditure in the UAE, and the company should have adequate physical assets in the UAE. Like I said before, there are 9 relevant activities. Those are banking business, insurance business, investment fund management business, lease finance business, headquarters business, shipping business, holding company business, intellectual property business, and distribution and service center business. Each of these I will be explaining in my coming videos. So, those businesses which are carrying out relevant activities should notify the regulatory authority about the economic substance. So, what should be disclosed in the economic substance notification? Let's see that. So, in the economic substance notification, the licensee should disclose the following: the licensee's financial year end, whether or not the licensee earned any income from the relevant activity, whether or not the licensee is exempt due to government ownership, whether or not the licensee exercises a relevant activity, and whether any income generated by the relevant activity is totally or partially subject to a tax system outside of the UAE. So now let's look into the regulatory authorities for each activity. For banking business, it is UAE Central Bank or the competent authority for the financial free zone for the banking businesses. For insurance businesses, it is Insurance Authority or the competent authority in the free zone or financial free zone for the insurance businesses. For investment fund management business, it is Securities and Commodities Authority or the competent authority in the free zone and financial free zone for the investment fund management businesses. For lease finance businesses, it is UAE Central Bank and the competent authority in the free zone and the financial free zone for lease finance businesses. For headquarter businesses, it is Ministry of Economy or the competent authority in the free zone and financial free zone for the headquarter. For shipping businesses, it is Ministry of Economy or the competent authority for financial free zone or free zone for the shipping businesses. For holding company businesses, it is Ministry of Economy and the competent authority for free zone and financial free zone for the holding company businesses. For intellectual property business, it is Ministry of Economy and the competent authority for free zone and financial free zone for the intellectual property business. And for distribution and service center business, it is Ministry of Economy and the competent authority for the free zone and financial free zone for the distribution and service center businesses. Now we need to know the reportable financial year. The regulations apply to the financial years starting on or after 1st January 2019. For example, a UAE company with 1st January 2019 to 31 December 2019 financial year, first assessable period would be 1st January 2019 to 31st December 2019. A UAE company with 1st April 2019 to 31st March 2020 financial year, first assessable period would be 1st April 2019 to 31st March 2020. So no need to comply with the regulations for the period of 1st January 2019 to 31 March 2019 in such cases. So the ESR report should be submitted with the relevant authority within 12 months from the end of the financial period. This means it should be filed on or after 1st January 2020 but before 31st December 2020 for the companies having year end 31st December 2019. So now let's look into the penalties. Businesses will face financial penalties if they fail to comply with the economic substance regulations in the UAE. So I will discuss the list of penalties in my next video. So now let's understand a little more about OECD and BEPS. Like I said before, OECD stands for the Organization for Economic Cooperation and Development. It is an international organization that works to build better policies for better lives. They work together with governments, policymakers, and citizens in establishing evidence-based international standards and in finding solutions to a range of social, economic, and environmental challenges. From improving economic performance and creating jobs to fostering strong education and fighting international tax evasion, OECD provides a unique forum and knowledge hub for data and analysis, exchange of experiences, best practice sharing, and advice on public policies and international standard settings. So, what is BEPS? Base erosion and profit shifting refers to tax planning strategies used by multinational enterprises to exploit the gaps and mismatches in the tax rules to avoid paying taxes. Developing countries have higher reliance on corporate income tax, which means they suffer the most from BEPS. So, in order to address the tax avoidance and to ensure that profits are taxed where economic activities generating the profits are performed, OECD developed BEPS project with 15 actions set out to the governments with domestic and international rules. Mentioned are the 15 action plans, out of which 4 are minimum standards. The highlighted ones are the minimum standards, and out of which UAE has implemented 2. Those are harmful tax practices and country-by-country reporting. Economic substance regulation comes under harmful tax practices. Thank you for watching this video. Hope this information was useful to you. If you have any queries, you can reach out to me. Thank you. Stay safe.